Greetings, Dr. Jeffrey Scott here. This is my weekend market update for Memorial Day weekend, which is Sunday, 5/28/23. The title is, Will the Debt Deal Feed a Blow Off Top? I think the futures are already out. I won't say it's a blow off top kind of a move, but it's a positive move. But then to counter it, heed the BANGO. If you don't know what the BANGO is, stay tuned and you'll see why. My email address is htsidoc@gmail.com. If you're new to my channel, please hit the subscribe button, hit the alarm, and you'll get notified when I post these. If you like what I do, hit the up or down button. If you don't, and either email me or put your remarks in the appropriate section on YouTube so I can improve these programs. As always, education is my sole purpose. I'm a doctor, not a broker. I am independent. Nobody pays me to say good or bad things about any tools. And I paid or am paying for, as we go, every tool that I use. And trading involves risk, and you are solely responsible for any investment decisions you make. Just a quick aside, and again, my email address there. My live session, which is going to be a week from this coming Friday and Saturday, so about 12 days, 13 days from now, still has a couple of slots. And if you're interested in online access or live access, please give me an email, htsidoc@gmail.com, and I'll send you some more information. Well, interesting week in the market. And you know, you've heard over and over divergences, the bifurcated market. Well, look what we saw. If you look at the 5-day move, FANGs, this is a leverage, but we're up great. The Q's up 3.5%, the composite up 2.5% as the leaders. The large cap S&P 500 up 0.3, the Dow down 1%, and the NYSE down 1.6, and the Russell flat as well. So large caps growth probably did okay, but overall large caps were laggards. So that's one thing that's going on, a clear divergence between something like the Dow this week and the NASDAQ, the tech stocks. And we all know why. They got juiced with the NVIDIA surprise forward-looking comments. The other thing to point out here, and we talked about it before, is look at the Qs are up 37%, the NASDAQ's up 28.6%, the Spider is up 20.7%, all from those October 13 lows. Again, fueling the belief that rather than being a bear market rally, this is a new bull. I think there are mixed answers there, and I'll give you the evidence, pro and con, as we go. Even the laggard Russell is up 8.4% from those lows. You could see on the week technology, communications, and discretionary leading the markets. And there were some pretty negative things. If this market was about to go down, you might expect staples to be doing better. They were leading to the downside. Materials down on a probably strong dollar related. Utilities, real estate, things that you might expect to perform well, healthcare, in a tough market were the laggards. Now, if we look at the Q Edge tools, you could see that on Friday, still a split market, and we improved for between Thursday and Friday, the number of stocks trading below their midline or their Bollinger Bands in the S&P 1500 improved. But at best, it's a middle market. But if you look at Friday, what a strong market. 91% of sectors were up, 76% of industry groups, and 71% of stocks. And you could see down here that the big move was in IT, information technology, driven by NVIDIA and other semiconductors, communication, Meta, Snap, others, 1.5%, Arista Network, etc. Now, when you look down here, this is the same results from up here. If you look over 5 days, it looks totally different. If you look over 10 days, it's sort of mixed. And over the month, it's at best mixed. So we've been in a choppy market and not one that has looked like Friday for more than a day here and a day there. We'll talk about the distribution down here in a minute. Now, I don't always show the expected move charts, but look at what happened. So if you look at the spiders, so the expected move looks at what it would cost to do an at-the-money straddle. where you buy a call and buy a put, or sell a call and sell a put. And if you're buying it, you think there's a big move coming. And if you're selling it, you don't, you try to price it at the point, 2 times the move. So, or half the move, I should say, because if you're selling a call and selling a put, the expected move would be take the combined premium, this is the high, expected, this is the low. And for you to make money going long on one of these trades, you've got to have a move outside of that. And since 80% or so of the time it's going to finish inside the move, inside the green and the red, this is one that people in the know like to sell, not buy. So you look at the S&P, the gray line is where it closed on Friday. It closed up a little bit on Monday, big down day on Tuesday, a down day on Wednesday with a reversal candle, the big bottoming tail outside the red, which must have made the market makers happy. Thursday, an indecision day, a little bit up, but pretty close to where it closed on Wednesday. And then the massive move on Friday got it back above the center line. So those that sold that option spread made money. Look at in contrast, let's look at the NASDAQ. The NASDAQ on Monday did up a little bit. On Tuesday, it was down, but modestly. Wednesday, you had that reversal candle. Thursday, a nice move. And Friday, just a massive move. And you could see how far outside. So the people that sold the spreads lost money on the NASDAQ. How about the Dow? Now, the Dow traded down Monday, Tuesday, Wednesday, Thursday, and then finally got the reversal on Thursday with a reversal candle, still closed down, and Friday got back into the range. So those are 3 different performances across the top. The Russell traded up on Monday. Tuesday had a shooting star. Wednesday and Thursday almost came down and touched the red line. And then on Friday, it closed just about where it opened or closed the prior week. So each of the markets behaved differently. The VIX stayed within its expected range. And the other strength, and probably part of it being concerns about the debt ceiling and a flight to risk, or to safety rather, as you saw the dollar go up. So that also could have gone up for a number of other reasons as well. So what is the Fed signaling? Well, the Fed speakers over the last couple of weeks have been saying things like more raises, longer duration. I've been talking about a pivot, although there's been some talk about a pause. And you can see the 10-year and the 30-year rates have just shot up dramatically. Interestingly, look at the 10-year, the spider went up on both the 10 and the 30 despite the rise in rates. Look back here as rates were spiking earlier in the year, or actually, or late 2020, earlier this year. And then look what happened to the spiders on both the 10 and the 30. Is there a recession in our near future? I should probably stop saying this slide because eventually I'm going to have to give up. If you just look at history, when you get the 10-2 inversions, the 10-3 inversions, these gray bars occurred after most of the inversions, and we're looking all the way back to the late 80s. Well, we've got an inversion. We have a massive inversion. I have no idea if that means more or not, but I still think there's a high likelihood of recession later this year, early 2024. If you look at the cost of credit and tightness, it's pretty stable, and I'm looking for the spike that we saw with the 2008 financial crisis and the 2020 crash. And if you look at the Philadelphia Diffusion Index for District 3, you could see that when this index drops below -20, you get a recession, the recession and all these being the gray bars. And what's interesting is we got back above -20, so we'll see if that is perhaps something saying that, oops, maybe not yet. Now, what about breadth? In white, you can see stocks above the 200, stocks above the 40, both dropped. Now look at the divergence, higher prices, lower participation, higher prices, lower participation. And then the stocks making 13-week new high, new low ratio stayed about neutral without much change over the week. Now again, the divergences are real. If you look at the NASDAQ overall, you're seeing prices are going up while the AD line is falling. If you look at the NASDAQ 100, they're going up together. So a divergence between the large cap Qs versus the equal weighted NASDAQ, much more broader average. Again, these are things, the recession risk, the divergences, the weakness in breadth, they have to keep you nervous that not all that glitters is gold. And what about large caps over small caps? You could see that the AD line, it might be lagging, but it's turned up on large caps, not quite at new highs here, yet on small caps it hasn't turned up at all. Now I'm going to introduce you to something called the BANGO. Now, Ian Woodward, who I learned so much from, such a great guy, came up with a number of funny named indicators. And the BANGO is one that I don't use too often, but it represents that period of time when there's no buyers left. And a market's been exhausted to the upside, and the last person that looks like us, the individual investors, is wondering who's going to buy his stock now that nobody else wants to buy. So this is a combined of a number of indexes. So on the price chart, it's a composite. The BANGO is calculated on the NASDAQ and the NYSE. These blue arrows are the BANGOs. Let's go back to late 2021. These skulls are the Hindenburgs that occurred in droves before the market died. But before you even got the Hindenburgs, you had two BANGOs, and the market sold off. Let's go look at the August 2022 rally attempt. When did it end? It ended when it got into this area here with a BANGO. Let's go back here to January, February 2023. The BANGO signaled the end. That wasn't a big crash, but it was the end of the move. Well, the BANGOs are firing here. We had two this week. So it doesn't mean it's over, but that's a technical indicator that doesn't listen to the news, that doesn't know about debt ceilings or anything else. But it is showing us that we're getting to an area of exhaustion for the bulls. Current buckets, we showed you this in the Q Edge. I just wanted to show you here on the left that although there's more stocks sitting here, there are not a lot of stocks sitting below the Bollinger Bands or above them. So I'm going to put that at neutral. I wouldn't expect a Hindenburg omen here, but notice we're seeing new lows on the NYSE, on the NASDAQ, and interestingly, the NASDAQ has new highs and new lows, something that you can see at market tops. Earnings surprises drive results. You can see that this is taking all the stocks in the market. I mean, the complete 11,000 in the HGSI database. And it's asking the question based upon the fundamentals of Friday the 19th, how did they do on the week that just ended? Forward looking. And we could see plotting ERG, which is EPS rank plus relative strength rank plus group rank, that for the most part stocks were pretty flat. But you can see these peaks here, and these peaks represented some stocks like NVIDIA that either had earnings or projections with their earnings call or went up in sympathy. And you could see for the first time in a long time, those stocks with good earnings led. Interestingly, the relative strength rank, the worse the relative strength rank, the better stocks did on the week. And I guess that's because a lot of these stocks that started moving have been laggards with low relative strength. Just interesting. This week, we got plenty of news. Obviously, Monday, the Memorial Day holiday. Despite that, as you are probably well aware, as I do this at 9 o'clock on Sunday Eve, the futures are open, and Right now, the NASDAQ futures are up about 75 points, the S&P up almost 12, and the Dow is up 71. So clearly off of where they started, but still a positive session. We got some Case-Shiller home and confidence on Tuesday, but notice we got Barkin on Tuesday, Harker on Wednesday, Harker again on Thursday. So you might still expect to have this market and the potential for a pivot talked down by the talking heads. If we look at earnings for this week, there's still plenty of earnings. It's starting to slow down, nothing before the open on Friday. And as I state down here, it's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. So we finished the week on an upbeat note. Lots of turbulence, as I showed you on the expected move charts. S&P traded a wide band between 4,100 and 4,200, closing closer, just above 4,200, the highest level since last August. Clearly, this was driven by NVIDIA, anything that touches AI, chips, and others. Big move. We did have a potential debt deal agreed to between the House Republican leadership and President Biden. Still needs to be ratified. And I think there's things there that are going to make both sides unhappy, and maybe making both sides unhappy is a good thing, because maybe that's compromise. But let's see if that happens. So what will that do? Will issue debt could ultimately knock the price of bonds down with rates are up, but the rates were probably juiced coming into this because of a flight to safety. So maybe it won't have as much of an impact as I would think on the price of bonds. Maybe they'll go up and the rates will come down. I mentioned the BANGO signal. They don't happen very often. They typically mean a short to intermediate term top. So as I listed here, and this is not meant to be inclusive of everything, there's something to like for the bulls. We are in bull territory. Technology leadership is great. The debt ceiling agreement, closer to the end of tightening, whether we pivot or not. For the bears, it's still about the recession. That BANGO signal has to make me pay attention. Lack of participation is concerning. And typically, and we know we've got more tightening, and bear markets typically don't end until rates are cut. So to me, it's time to continue to stay nimble, fewer positions, tight stops, cash on the sidelines. I do buy into strength, but I'll start to lighten again after the rally we have if we open up because of the debt ceiling news. So again, if you like these types of discussions and my heavy emphasis on the market, I welcome you to come during the week to stocksanddocs.com. Now, of course, this is not the best week to come. I'll try and get here as much as I can, but I'm traveling and then on vacation right now, visiting one of my grandkids, and I'll be heading to Chicago for ASCO, the major cancer meetings, for Thursday till the following Wednesday. By the way, that meeting typically is a hotbed of information and moving biotech. And I'll show you one that moved because of some data that came out on Friday. So I use lots of programs, people know that, but I really use this one the most now, which is called Wealth Charts. So I'm going to take you through how I look at the market in wealth charts, how I look at some of the top stocks to buy, and maybe even give you a couple clues as to what I'm looking at as the market will open up on Tuesday. So I start with hot stocks, and I've got it stuck on indices. And why? I want to get a sense of what's moving. And if you have a flame that says you've just moved a lot, and you could see, even though it's pulled back somewhat, a little bit of a flag, the ARC genomic revolution really ran up over the last couple of weeks. Cloud, communications, robots, gasoline, discretionary have been leaders. Now, I also like things above 800, and the only one close is ARC. But the flames give me a sense of where money is moving. When I look at the indices, and we'll look at the 5-minute, because I thought that Friday was a pretty impressive day. And you could see that Friday would have opened right here, gapped up, traded up, and really broke above this 4,200 line, but closed. What did it close at? Closed at 420 and a quarter. So I think you have to say it's pretty much closed on that line of resistance. Now, if you go back to where the October lows were, and I have to go, I'm not even going to pull it up on this chart. You have to go back quite a bit to get back to about 3,500 of what the range has been. If we look at the daily, let's bring it up to big. You could see here, we failed, will we fail here? And if you went back to the left, you'd see why this is an important line. Failure, broke above and failed. As I said, failed here. So to me, 420 is an important line. And then why did I put a line at 3,500 or 350 here on the spiders? Because this is your October 13th low on that belt hold reversal day candle. So if we just tighten this up and look at it, if you want to be bullish, you had a nice close finish on the week and a candle closing near the high up 1.3%. If you want to be bearish, you'll call out the fact you're right into resistance. You want to see what really bullish looks like. Let's take a look at the Qs, up 2.5% on Friday. At fresh highs, you'd have to go back quite a bit to find higher highs, and that gets you back here into April 2022. Bullish number one. The diamonds, let's look at a daily chart. And the diamonds, not so good. The diamonds have to get above the anchored VWAP to the 2022 highs. They came all the way down here and touched this white line. And this white line represented the December lows. The yellow line represents the October lows. So I'd like to see it get above that thick yellow line. It's still below the 50. So super strong Qs, the spiders are second place, the diamonds in third. And then if we look at the IWM, way below their anchored VWAP, below their 200, did take out the 50. That's the laggard. On a strong day and a strong week, you wouldn't expect much for the VIX, and you could see it was down 6%. Let's just look at, let's open up. I'm going to open up my Tastyworks because I get the futures there. All right, going to do that to me. There we go. And let's go here and let's make that the VIX. There we go. And you could see on the week, it was up 6.78%, but a giant topping tail that failed. So the VIX, even though it had a big week, it really finished not much different than where it started. And the dollar continues to have a nice run, and now pausing here at the 200 where it paused on the March run up. It'd be interesting to see what the dollar does. Dollar was strong, then that should tell you about commodities. And you could see gold continues weak, although it was up a tad. Silver was up 2.5%. You can see both have broken down below their 50s. Oil's kind of in a trading range, and it failed the breakout levels and failed it here from when OPEC cut production. And oil had a tough week. Natural gas had a tough week, down 1.78 on Friday. And look at the rates. It'd be interesting to see what the rates do with the if the debt ceiling gets approved. And you could see a bit of a shooting star here. So maybe we're getting near the end of this rate run. Timing model had a change this week. On the timing model, you need to have price above the 30-week WMA and a green weekly BANGO. These are weekly charts, so the single BANGO is weekly. The spiders and the NASDAQ, at least the Qs here, are decidedly positive. The Russell remains in a negative state, and we lost the positive state on the diamonds, both on the BANGO and the price move. So the yield is to remind me that that's new. So as much as I want to feel like a perma bull again, as much as I want to be excited by the price action that we're seeing in technology, it hasn't carried on to the small caps and the Dow stock. So I still think that tells me about risk. If I look at breadth, and this is something else that's somewhat bothersome. In the middle, you have the equal weight RSP versus the cap weighted spiders. On the right, we have the equal weight QQEs versus the cap weighted Qs. Decidedly favoring the large caps. No surprise over all the data I showed you. The semiconductors was one area. Now, this is an hourly chart. I was getting some errors on the daily chart. Let's see if I'm still getting them. Nope. Perfect. So on the daily chart, you could see that we've got a little bit of an interesting move here, suggesting broadening it out. 50 versus the FANGs. As much as I wish to say that the IBD 50 small cap growth, the things that a lot of us followers O'Neill like to trade, they are not doing well. And if you look at the Qs versus the Russell, it'd be really nice to start to see this come back down. So there's a lot of undesirable things, I think, when it comes to breadth. And up here, I'm looking at the TLT versus the spider. And I'm not going to go back, but if you look at periods of times of recession, the TLT to spider will spike, showing strength in bonds. We're definitely not seeing that right now. If we look at the hourly sectors to just get a sense of what's working, what's not working. Materials, no. Communication, still strong. Energy, no. Financials, no. Industrials, no. Technology, absolutely. And then if you think that this market is defensive, it's not. Staples, no. Real estate, no. Utilities, no. And XLV, no. So the sectors that you'd expect to be doing well if the market was about to roll over are not doing well. So that is a message, I think, for the bulls. And you can see discretionary has come up while staples have gone down. Now, interesting on healthcare, Labu, biotech, came down some, but looks a lot different than healthcare as a whole, and there has been strength in biotech. Now let's go look at my bull scanners. In a minute, I'm going to show you something new and exciting for me, for sure. First thing is, you could see mostly green. Ulta being one that actually was on my short list last week that got clobbered this week. And you could see it rolled over hard. But mostly green, big cap tech, all green. If we look at Well Scanner, let's just see what comes to the top and what has 800 scores. Letting it run. So software 810, Arc Genomics 800, Internet 800, Semis 800, $792. Then we start to drop cloud, FANGs, Qs, etc. All right. So technology still in the lead. So my CAT scanner has got some new goodies in it. And if you were to look at the CAT scanner, you're not going to see these things to the left because those are customs that I just put together that anybody can put together. But you're going to see a list of things that Rob and Ted and others put together to help you. And you can create your own filters. And that's what I did on these four. So before I talk too much about them, and I just messed up my screen by doing this, but let me reset this a little bit and let me pause it for a second and fix the screen. All right, since we knew that technology is leading, we could quickly look at the technology sector. And that is going to be somewhere down here. Here's technology. And let's look at pullback and uptrends. I'll talk through my four filters here. The stocks that I want to be buying are stocks that are in a longer term uptrend. So let's just put Booz Allen up here. Not a great example. It meets the criteria, but it's not a great example. How about Teradyne? Nope. Arista Networks. Well, they all are the same because they all have recent pullbacks. All right, we're going to look at Salesforce. So what's a longer term uptrend? On the right is a weekly chart. When you look at Salesforce, I don't think anybody can look at this chart and say it's not in a long-term uptrend. All you got to do is look at my weekly BANGO, and it's been in an uptrend ever since the weekly BANGO turned green, and you could see that it reversed here, and that's when the BANGO. So I'm looking for stocks whose weekly BANGO is green. Now I could filter it even more by requiring so many weeks. I'm not requiring that. In a short-term pullback is what I'm looking for. You'll see the weekly BANGO and the daily BANGO here turns red. So there's your short-term pullback. And then these are momentum. This is relative strength. This is OBV. So I want to find stocks that have a weekly BANGO that's green, meaning it's been up on the weekly, recent pullback on the daily, and then having some of my momentum dots. So if I look at Momo let's look at pullback in an uptrend, you're going to see price and volume or whatever you want it to be. I required at least one bullish dot and no bearish dot. And I put in here it had to reverse on the daily within the last 9 dots. And both my daily and weekly BANGO are green. For those that have been here before, they know that that's my standard search criteria. So when I look with the higher dots, the ones with the dots are usually the most attractive. So Booz Allen, I don't like it already, and I don't like it because of the 200. When it gets above the 200, I will reevaluate. It's coming out of a squeeze. It's got a momentum, breakout, volume, and a big gap. So there's a lot of neat things there. Relative strength and OBV are up. I like it. I just know it failed at the 200 here, failed at the 200 here. It's got to get above the 200 before I'm interested. Workaday. All right, so the good news is with Workaday, it is in a longer term uptrend. There's the green BANGO. Here's the weekly and the threes. And it broke out on the daily. And that's great. I'd have to go and look at it. The challenge is with that gap. So I might want to chase that, something to consider. So it's got a gap, volume, breakout, and momentum. Look at the relative strength in OBV. The time to buy this stock was back here when it took out the 50. And you did get an impulse dot, so it would have made my scan. Sienna Corporation, again, similar to Booz Allen, except it has taken out the 50 and the 200. I want to buy things that are up in the upper right hand, not coming off the bottom. Coherent looks the same way. Lumentum. So what this is telling me is we have a lot of stocks who've been beaten down that are bouncing, and that probably explains the high earnings but low relative strength being important for performance. So as I look through this list, one that I probably like the most of them is ON Semiconductor. So let's take a look at it. So ON has been in a trading range here for quite some time. But if you look at this, you sort of got a cup, maybe the drawer. And I'm not a good drawer, but you could kind of argue a cup, a handle, and a breakout. So I like ON Semiconductor, and it's got big volume the last 3 days, breakout above all the recent congestion, and momentum. Relative strength and OBV are up. This shows you how nasty a week it was, where on the week it traded down and closed up right off the highs. So ON Semiconductor. Teradyne is another one that I thought was interesting, but again, I still got this overhead supply, but it did break above the 50. So I could look at the market that way. That's pullbacks in an uptrend. Let's say I want to find things that are beaten down, whose weekly BANGO has already turned, and now their daily BANGO turns. I call that my bottom poppers. And Microchip is a bottom popper. This thing is sold off hard, all the way down to 200. But notice that I haven't required the weekly to change here. The weekly is going to take a little longer to change, but the daily BANGO turned green. I took out the 50. Not the stocks that I typically buy, but ALGM is one I know well, so I'm not necessarily waiting for the weekly BANGO to turn green, which would be required for this to show up on the pullback and uptrend. It's a big pullback. But here's a stock I like with breakout momentum, OBV, and relative strength turning up. Momo Up says, I don't care anything about the bongos. All Momo Up is price and volume, bullish dots, and that's the only thing. So now I'm just looking for stocks that move. Now, most of these are going to be on one of the other lists. Here's one that might be interesting, Ambarilla. Now, it just took out the 200. It's got a ton of overhead supply, but the weekly's been up a number of weeks in a row, and I had volume, breakout, and momentum. Now, I could add a squeeze or anything like that to these scans as well. So, Momo up just means I've got bullish tendencies. Pull back in an uptrend is I've got the daily bongo flip-flopping. Bottom poppers are stocks that have been beaten up. And then rockets require your daily and your weekly bongo to be up. And these should be things that are heading up towards this area. So AMD as an example. ASAN. I don't know AVPT, but it certainly is a rocket. So this way I can make my life very simple. You want to see a crazy rocket ship? I'm surprised it's not first on the list, and it's not because it's already moved. But look at this, SMCI. Back on this state, perfect buying opportunity. Green turned to red. Four green dots, gap, volume, breakout, momentum, relative strength, OPV strong. And since May 3rd, it's ran from if you bought it the next day, 135 up to 219. That's a rocket. So I'm going to stick with my pullbacks in an uptrend. And let's just take a look at communication stocks and see if anything there makes my filter. Oops. Lionsgate Entertainment. Actually an interesting looking chart. It's up a lot on the daily and the weekly. It had a pretty strong pullback here, but it took out the 17 to 50 on really high volume. Four dots, relative strength and OBV look good, and these are just two classes of stock in the same instrument. And you could say that you've got a flag here and you broke out above the flag on Friday. Or we could do my weekend review, which is my top-down list of some of the best stocks. Let's just see if anything come up. We're going to run that very quickly. Here, weekend review, and let's start with the pullback and uptrends. And we got four bullish dots. We haven't looked at Elevation Oncology. So I mentioned I was going to show you something that had a strong reaction and related to the cancer meetings coming up. On Friday, the abstracts, which are what you submit, and then if you get accepted in an abstract, and I've got two accepted for this meeting personally from, well, not just mine, but that I've worked on with my company and also a couple institutions. It's a big deal. You get abstracts accepted, you get posters, you get podium presentations. And if you're a biotech, and especially if you're a small one, this is when people find out about your results. Look at the volume on this stock on Friday. Do I know what the news was? No, I didn't look. But it'd be either they got a takeout or more likely they had some positive response to their news. I'd go look at that. It's a cheap biotech. And I try and figure out what drove that on Friday, and I will be. Ruckus is one that definitely had some positive news on Friday. Now, like something else we looked at, I'm concerned it's running into the 200, but I'm going to make sure that that's sitting on my watch list because this is a big meeting, and we'll see. So Booz Allen from the top, below the 200, watch list, not ready to buy. We looked at Elevate, looked at Lionsgate. PDS Biotech, I suspect it's the same thing as Ruckus and the other. Well, maybe it was news. No, Upgrade 21, it's at $9. 24, Outperform, it's at $9. PDS Biotech might be one I might want to look at. So that's all right. PDS Biotech, look at that gap up, four dots, massive volume, breakout momentum, and odds are they had something published because the abstracts came out on the 25th, which was Thursday night. So Friday, it would have been when it made its move. Work a day, CRM software must have been a gap up on earnings. Upgrade to outperform, price 235. I'm not going to go through all of those, but look at the volume that came into this stock. Where's the bear market? These things are beautiful. Sienna, we looked at. Coherent, this would be one that's pulled back. It's got to get above the 200. There's better things out there. Costco, in the land of retail disasters that we went through, where some were great, like Gap and Urban Outfitters and Abercrombie and Fitch, and then others looked like American Eagle were horrible. Kind of breaking out of a congestion zone, coming out of a squeeze. Massive volume, breakout momentum, great relative strength in OBV. So notice how using a simple tool here, I'm finding stocks that are, many of these are actionable. So weekly bongo's green, daily bongo, relative strength OBV, took out the 17 and the 50, 3 dots. Got to worry about the 200, but that's just me. So now I can take this list and I can very quickly, I can look at the rockets, and we've looked at every one of them until EFC, and here's discretionary by itself breaking out. And remember, rockets, what I told you, price and volume, and all I care about is that the weekly bongo has been positive at least 5 weeks, and daily and weekly are bullish. Okay. Look at that. Let's look at Apple. What a rocket. So all I'm looking for here are stocks in a strong uptrend. You notice that the ones that were below the 200 did not make it. The bottom line, bottom poppers are stocks that have sold off, like Gap. Then, for whatever reason, in this case it was good earnings, you got 3 dots, massive volume, breakout momentum, relative strength of the OBV turning up. PDD, great earnings, big gap up on massive volume, breakout momentum. So not waiting in this scan for things to turn green, except for the daily bongo telling me it's time to look at those. We've looked at pullbacks and uptrends, and then Momo up is going to pick out anything, even those like Booz Allen that are below. So I will eventually publish these so you don't have to do it yourself. But there's a lot of interest in this market, but there's a lot of technology names and biotech, software and semiconductors. Best Buy was another retailer that surprised. And why is it on Momo up? Because it's got 3 dots coming out of a squeeze. So on that note, I'm going to tell you to have a great Memorial Day. Thank you to all those who served, all those who are serving, all those whose families lost one who served and who supported one during their serving time. Have an awesome holiday. Drive safe. We'll see you next week.